All right, everybody. Third one of these. Give me a second. I want to make sure that we're streaming live, of course, on all the various platforms. This will be an interesting conversation with an up-and-coming thought guru and leader in this space who's got a hell of a background we're going to talk about, as well as some interesting things as far as his business goes. For those that are watching this across X, LinkedIn, and YouTube, I can see your comments. If any of you want to ask questions, don't hesitate to put it on whatever platform you're on. I'll try and bring it up, and we'll make this as interactive as possible. This is a sponsored conversation by Fabio's firm here. I'm going to be talking about his business as well as the interesting things that he sees from the retail community as well as the options market and why he came up with his company. And with all that said, my name is Michael Gayed, publisher of the Lead Lag Report. Joining me for roughly 50 minutes is Fabio Ruggeri. Fabio, introduce yourself to the audience and maybe to me a little bit more formally. Who are you? What's your background? What have you done throughout your career? What are you doing now?
Yeah, Michael, thank you. Thank you for having me. So, hi, everyone. So my name is Fabio Ruggeri. I'm from Italy. After school, I moved to London and I started really working in finance back in 2007, where I started working at Bloomberg. So obviously a leader in the data space, covering obviously global banks and asset managers. I worked part of my career in London and then I moved to New York. And I was at Bloomberg for about 11 years, where I had the opportunity to kind of like work with the biggest funds in the world, the biggest asset managers, the biggest hedge funds. And that's when I really started developing the interest in what was changing in the finance industry. After Bloomberg in 2018, I went and actually worked for a startup. That was my first startup experience. I was the head of business development for an alternative data company. And basically, we were selling alternative data to large quantitative funds that were trying to make sense of complex information to basically create trading strategies. And that kind of fascinated me because I saw kind of like the shift from the traditional finance to more like the alternative finance. I was there for about 3 years, covering obviously companies like the Citadel of the world and the biggest funds in the world, and really trying to understand how they were embracing the large data sets, the big data, to then create trading strategies. And then I also went and worked for a cybersecurity company in AI, also leveraging big data for both investment and security. And then back in 2020, we really started to see like a shift in the market. And that's when we started really implementing our own financial modeling that then became the backbone of Menthor Q and what Menthor Q is today.
All right, so there's a lot I want to unpack there. The idea of alternative data. Let's talk about what are the sources of that and what actually is alternative data. I mean, when I hear alternative data, it sounds like it's almost like political. But what does that actually mean?
Alternative data is it could be everything very broad. So obviously most investors are very familiar with fundamental analysis, with technical analysis, and the traditional data sets. So Bloomberg was really the embrace of traditional strategies. So from financial statements to news to pricing information, right? What people don't really understand is that there is value in trading coming from sources that might not be as easily consumable as those. I can give you an example. Let's imagine that you take geolocation data and you are monitoring traffic cameras, right? As an investor, you want to understand how many people are driving to Macy's in any given location at any given time. And if you see a pattern where there's less traffic over the past 3 months, that could also be a signal that the sales of Macy's are going to go down. So like you have these big companies that are trying to get their hands on all these kind of data sets that can give them an idea of where the sales of a company that they're monitoring could be, and then they will place their bets. Another interesting data sets that people buy a lot is credit card information. So if you are able to decode this data set that is publicly available information, then you can kind of try and forecast what the potential sale of companies can be, and then obviously you can place your bets ahead of earnings and stuff like that. Other alternative data sets are like executive travels. So let's imagine that you get access to the travel schedule of CEOs like Tim Cook, and you understand that Tim Cook is going to Dallas 3 times in a year. Why is he going there? Maybe there's an M&A activity going on, and then you're trying to look at the companies that are going to be in that location to try and formulate a theory behind something like that. So those types of data set that obviously are not really available for retail investors are the type of data that we were selling and where companies are actually making returns based on those data sets.
And it seems like you have to be very clever in terms of figuring out not only where those data points are, but what those data points should be, because it's not like these are things that you will learn about in some finance course.
It's basically like you obviously need to have the know-how of building quantitative trading strategies and obviously being able to handle big data. So obviously large databases, large quant desks, obviously technology, so software engineers that can then build the infrastructure to be able to handle that data. But yeah, absolutely, it's not every day's investors can have that type of setup. And that's why with Menthor Q, we are trying to kind of bridge the gap between this type of investment and what the retail can do today.
Let's talk about retail, because on the one hand, there's some that argue retail is more sophisticated than ever before in history. Certainly, retail drives markets much more than ever before in history.
Yeah.
There's also the argument that retail, there has been such an influx of new retail post-COVID that are playing with options and very complex financial instruments that they don't know they're playing with fire. And while they're making money now, they don't really have an approach that is sustainable long term. I'm curious, given that you've seen this from an institutional perspective, I think largely, what's your impression of sort of the state of retail education when it comes to really understanding markets?
So I think so there's a couple of trends, and that's why also the option market is now very important. So first of all, and I don't know, maybe if we want to bring up my slides, I can go over this also with some visuals. Basically, if we go on the first slide, so this is the period between the 90s to 2007, right? Where the main strategy that was driving markets was mostly fundamental analysis, where you are looking to discover companies that have good fundamentals that they will appreciate over time. Then the first credit crisis came, and obviously with the immersion of liquidity from the Federal Reserve to kind of fix the situation, fundamental analysis doesn't really work in the past kind of 10 years. And that's why like retail traders started really embracing something that they understand that is simple and easy for everyone, which is technical analysis, right? The problem with those two strategies is that you're using past data to be able to forecast future price movement. And obviously there's lagging in that. And then COVID happened. And then with COVID, we see a big shift in the market for different reasons. First, the lockdown, everybody was at home, everybody lost their jobs. So they had more time to spend to maybe like look at alternative ways of making money. And trading, obviously, at that time was a very big one, because you had all the GameStop saga where people that were investing $1,000 were hundreds of $1,000s in profit in a few days, or the crypto situation of 2020, 2021. So a lot of like people that didn't know what trading was started going into the market. Then you also had the Robinhood growth. So like brokers that can now allow you to trade with a few $1,000s in your bank account, right? So trading became kind of like a gamification. And then obviously with that comes like, I want to make money fast. And what is the way to do that? And that comes the next slide, which shows the growth of option volume in the past like 20 years. And as you can see, from 2020 to 2024, almost, we saw like the volumes almost triple compared to what it was in the past. And the reason is very simple. Options have leverage, and for someone who wants to get quick profits, they are the perfect instruments for that. But at the same time, they carry on a lot of risk. So if you don't really know how to use them, then you could really lose all your capital very, very fast. But option had a very fast appeal for investors that maybe didn't want to wait 5% return a year to be able to generate enough cash flow for their goals. So they were a very good instruments at that time. And that's why we see obviously the growth in the market there. And obviously, as you can see, the trend is kind of like staying there. So it's really, it's not like really gone down again since 2020. And that's why it's important for everyone to be able to understand what option can do and what's the power behind that data set, I think.
Yeah, and as you know, this is as of October 2023. So, I mean, obviously now it's a lot more intense. Do you have a sense of how much of that is zero DTE, very short term option trading? How much of that also could be funds that are selling options? I mean, there's also a lot of institutions that are trying to do covered call strategies to generate some income on the option side.
So I think in the recent year, I don't have the numbers up to hand. I apologize for that. But the zero DTE flows have really become very, very important. And those are also the ones that sometimes have an effect on the sudden price movement throughout the day. So sometimes there are days in the market where the market moves 1%, 2%, and nobody really can explain. There's no catalyst, there's no news activity, but it's because of the zero DTE flows that can actually have an effect. So obviously, if you understand how the option market works, now we've seen the growth of volume. If you want to understand how it works and the importance of, we will talk about market makers and the effect of liquidity, then you can understand why sometimes you see those sudden price movements, especially when you approach like important expiration like OPEX, third Friday of the month, or the weekly expiration on stocks, or the VIX expiration on the Wednesdays. Options are very, very important drivers of liquidity. And that's also why like a lot of companies are putting a lot of attention in options, understanding how to use them for hedging and for obviously speculation and trading.
Yeah, and you can argue also to some extent, I hate to use the word manipulation, but there's an extent of that, right? Because to the extent that everyone knows what dealer positioning might be, they can force a move. And we saw that a lot with GameStop and other type of positions like that. Have we gotten to a point, you think, in market analysis where the derivative matters more than the underlying?
So I think so, and so not in about. First of all, let's go back to 2021. That was the first time in history where option volume surpassed equity volume, right? So that was very big time. I remember it when I think it was the end of 2021. But the problem is that people need to understand that like option carry leverage and option have a time to expiration. So sometimes because of the risk the option carry, that movement of liquidity can actually be the main driver of the market. So I think, yes, they are very important. And I think, the trend is here to stay. I don't foresee this going back to what it was maybe in the 2000s.
Okay, so you got all these interesting dynamics playing out. You've got traditional data providers out there that are maybe showing things which are from an old regime and are not factoring in a lot of the stuff that's going on now. Talk to me about Menthor Q, and talk to me about why that's a different type of a service in terms of what it's providing analysis-wise.
Yeah, sure. So we basically are trying to use the same approach. So we started really the history behind it. We started trading for about 10 years now when I was at Bloomberg, when I was at the other startup, and we started developing some sort of strategies for our own portfolios. At the beginning, it was based on technical analysis and fundamental a little bit for our more like longer term portfolio. But then we started developing a more speculative approach. And that we were doing like simple option strategies, like selling options, spreads, and so on. And then 2020 kind of came. And then that's when we started really to understand the importance of option flow. So we started partnering with now is our head of quant. And basically we started developing. So we were coding into Python script our way of trading and our strategy, and then we kind of develop our option models. And then obviously we started applying that during 2020, 2021, and that was very successful. And then we basically said, okay, like now that we have all these models, option models, simplification of the complex data set that is coming with the option market, now can we actually create a business out of it? And at the beginning, it was really just our Twitter account that grew from 500 followers to about 56, 57, I think we are right now, during 2021, 2022. We started a newsletter in 2023 that was very successful. And then we really started like putting everything into practice. And now we actually have a product, we have a platform. We're launching some big things next week. So we're very excited about that. And I think the key of the success here was to create simplification out of very complex data set. So the option market is complex, and if you are a retail trader, most likely you're going to run away from option. Whenever you hear the term option, oh, that's too dangerous, I don't understand it, it's too complicated. But in reality, like, we were able to simplify that, and I can share some example on what we did there. And then now people that actually don't even trade option are actually trading with us and are part of our group. We do futures. People that trade futures also leverage the same approach, but the power comes from the backbone of the option models that we built over time.
All right, let's go through some of the back end. I'm curious to see how the UI UX looks. I don't know if you want to share your screen or on that, but let's get that pulled up. Yeah.
Yeah, we can share our screen.
Here we go.
So first of all, at the backbone is what we call our products. Our products are mostly option models that are trying to simplify and give you an idea of how to trade and how to use them for trading. And we cover, as you can see on the left, a lot of different assets, commodities, crypto, ETFs, fixed income, Forex, futures. We are one of the first companies that are actually using futures options and deriving gamma levels from future options, and we're going to share why that is important. But essentially, we have string models, we have indicators that you can plot on your chart, we have option screeners, but the most important part is really our gamma levels and our option data. So the way it works right now, we are in Discord, but we are launching a platform next week for next Thursday, actually. And essentially, you are basically looking at our bot right here. So the first thing that we want to do, and I'm going to get like a very nice example. Tomorrow we have earnings from NVIDIA. And what we want to see is really trying to decode where the market is positioning. So this is one of our main charts. And this is trying to understand the sentiment coming from the option market and the positioning based on the option flow. So we're looking at the chart of NVIDIA. We're looking at where the net gamma and positive and negative gamma is. And that can help you understand where the market is thinking the price can be. So as you can see, we have simplified in a way where the green bars are kind of like the call size, so the kind of like bullish sentiment. The reds are the put sides, kind of the bearish sentiment. So what the UI is telling us is that there is a lot of activity at the 150 strike price. Our price right now is 140. So there's a lot of like call gamma right here at the 150 level, right? So again, there's not a lot of negative gamma right here on this strike. So the market overall is potentially betting that the price could go to 150 or above that. Then we also want to understand, okay, that's by looking at the full option chain. But what happens if we want to look at a single option expiration? So if I take the example of NVIDIA again, the picture doesn't really change. So here what we see is this Friday expiration. We still have our 150 level right there. If we go to next week, we also have our 150 right there. And then if we go to December, our major level right there is 135, but we still have a big 150 bar right there. So this is translating kind of like the option exposure that we take into our gamma levels, and then we are going to be able to actually go and plot those into a chart as well, because we have multiple integrations with trading views, Quantower, Bookmap, NinjaTrader, Sierra Chart. We have a lot of integration that are available for users as well. And let me know if you have.
Yeah, no, I think it's actually it's not a part of the marketplace I analyze by any stretch of the imagination, though I'm familiar with a lot of this stuff. But it's interesting to see how clean the visual is. Do you see on the back end from the existing clients the stocks that most people are looking at for options activity? I wonder if there's anything interesting there data-wise in terms of where interest is highest.
So I would say we do have some analytics on what users are looking for, and I think the things that people look for are the usual suspects. So a lot of our users are trading the futures. So they're looking at NQ, ES, gold and crude oil. Those are the main ones. But then it's always like, yes, the Nvidia of the world, Tesla, the Max 7, of course. Those are the drivers. We're looking at the VIX. VIX is very important because it's a leading indicator of potential sentiment shifts. So looking at VIX option is very key. So you always want to have the data on the VIX and the data on the SPX. And then occasionally during earnings, there will be a lot of activity, like especially this week. We have Nvidia tomorrow, but we have really important companies reporting. 2 weeks ago, we had basically Google, Apple, and all the stocks that reported. So that was also very important. And also another thing that option market can do is also can give you probabilities for the future. So we have customers that are day traders, but we also have customers that are swing traders. So we have like swing models that can tell you of where the price of a company can be by looking at the option market. So in this case, if we go back, same to Nvidia, here we have our swing model that will tell you the volatility band over the next 5 days, but also the bias and the potential direction of the price. So when you see a green band, obviously bullish bias. If you were to see a red band, is obviously a bearish bias. So here we have some volatility bands for the next 5 days. We have this $150 level right there and $129 right there. And here we also have our back test over the past 38 days. So the bands actually were successful on 100% of the 38 days, meaning that in 5 days from now, if we are successful, the price of Nvidia will be above 129. And if you go at the past, the band basically kind of like we're always kind of right where the price never really went below those bands. And why is this important? For 2 reasons. One, because with options, you can have flexible strategies that can make money in any market condition. So you could have risk neutral, market neutral strategy, you could have bearish strategy, you could have bullish strategies, or they could actually be used as risk management tool. So if you were, for example, an Nvidia investor and you want to understand, okay, what I'm making money on this company, what is my exit plan? Then this could help you understand, okay, what are the levels that you want to pay attention to, which is also very important. A lot of traders don't look at risk management. They only focus on making money, but risk management is actually very, very important.
And this work has only been done on individual stocks, not necessarily on indices, ETFs. I know you mentioned futures. Maybe touch on that side.
Yeah, so we do that on any asset. So we have the same level of information on indices. So here we have the SPX. We have the same level of information on ETFs like SPY, or we have the same level of information on futures like ES in this case. So the important part is people will think, oh, but they all move in the same direction, right? But the actual option chain of the 3 assets is different. So SPX is by far the largest by volume in terms of options as one option chain. SPY has a different option chain, and ES has also their own option chain. It's important to understand who is the customer of these assets, right? So who buys ES, who buys SPY, and who buys SPX. So if you look at SPY, most likely it's going to be pension funds, asset managers, the usual retail investor that is putting their 401k into the market. So they want to track the performance of the index. So their view of the market is more long-term. So whether if you have SPX or ES, so ES would be, for example, used by big institutions that are hedging, they would trade ES futures. So being able to spot any differences in the 3 different option chain can help you get a better understanding of potential risk. And the same thing can be done with swing models. So if you want to understand where can be the price of the index be in 20 days from now, you have our swing model right there. And then here what you have is our back testing, our bands, upper bands, risk trigger, and lower band. And here you can see, for example, the data. So again, going back to the option market, if you were to sell credit spreads using those bands, you would have been successful on 100% of the cases. Obviously, the challenge is, would there be premium for those strikes? And then obviously, how do you manage the risk and how much risk do you want to take? So that's a different story there. But you'll be able to kind of like understand what can be your threshold, how can I manage my risk, and how can I then place my bets.
How much of the platform is, would you consider to be AI driven? I mean, whenever I hear predictive, I'm thinking AI or just in general regression, large data analysis. Are you integrating AI in sort of the LLM way in any way?
Yeah, so basically, this is our first AI model, which uses a lot of factors, and we use like a machine learning algorithm. The next step for us is being able to integrate AI to be able to explain what the data means, because I think we've proven that the data kind of works and the approach works, but the challenge is for everyday investor, like how do you understand this data? So being able to explain that. So we're creating a system that will be able to explain what the data means, so that you can actually, in a few minutes a day, actually understand what's going on with the companies that you care about. So if you're an NVIDIA investor, you'll be able to understand how things have changed over time, and being able to explain the data. Obviously, it's not suggestion, it's not investment advice, but it's really, can you help me be smarter and understand complex data in a very, very easy way.
Let's talk about how you educate people around some of these concepts, because I don't know if that many people understand the options market, gamma levels, and data like what you're presenting. So first of all, do you find that an important part of the business needs to be on the education front, and what kind of things are you doing to educate others?
Yeah, so I think the education is very important. So I think the key part for anyone that approaches this kind of strategies and this kind of work is you really need to want to put time to be able to learn, because options are complicated and everybody obviously they hear the buzzword gamma levels and they say, oh, I want to use them. But the most important part is you need to learn the basic. You need to learn why they are important and what are the mechanics behind it. And then once you understand that, then that part is done. So you've done the heavy part. Then you can kind of start using it and basically leveraging it for your needs. So education is a big part of our company. And I don't know if you want to share my screen again. I can show you what we've done there. So first, anybody can create a free account and access all of the things that I'm going to show you here. So you can go on mentorq.com, create a free account. And then basically, first we have created a section called guides. Guides are really like tutorial documents that can help you understand anything you want to know about our models, about the option market, about strategies. So what type of trade, based on what type of trader you are. So if you are, for example, you mentioned zero DTE. Okay, if somebody wants to become a zero DTE trader, what are the steps that you need to take to be able to learn that? If you want to understand, okay, like I like your swing trading model, I want to learn more about it. Okay, we have a document for that. We have back testing results, right, to show you how that work. If you want to understand our gamma levels, right, we have our different gamma levels right there. There's a document for that. And then if you want to learn more about the general option market, then we have a knowledge base too. And if you want to learn about strategies, okay, I want to learn about income strategies. I hear a lot about the Iron Condor strategy or credit spread. So you can learn about income strategies there. And then any case studies, show me some success, and so on. So that's basically obviously the written content. But then we also have tutorial videos. So if you go within our academy, we have about, I think it's over 400 video lessons right here. So we have about 30 plus courses on many different topics. We have one very good one that we did is we did a live trading event during the US elections where we were live trading for 3 days. We have, roadmap training, technical analysis, options. So there's a lot of information there. So yeah, that's definitely a big part.
How long has the company been around?
So we started about 3 years ago, but I would say the growth of the company started when we launched our first newsletter in 2023, so over a year and a half. And the platform was launched about less than a year ago. So yeah.
What's been the general reception? I mean, you're in a relatively crowded field. Hopefully, those that are watching this, learn more about the service and the site. I'm curious to take a look, but talk to me about sort of the challenges in terms of marketing and getting awareness.
So I think so the challenge is obviously we started from scratch and we started back in 2020, and we really started from like, it was me and my partner. We had this very small Twitter account. I think it was at the beginning a personal Twitter account that we then turned into a company Twitter account, and we really started like tweeting about finance. That's our passion. And then our content kind of started really picking up, and we started generating our first 5,000 followers, and then they became 10,000, and then kept growing and growing. And then we really started to understand, okay, like what are the key differentiator that we can bring? And I think the key is really our focus, our ability to simplify complex things, and then our dedication, right? We've been working for the past 3 years, day and night, nonstop. And then obviously we were able to then hire a very good team of people. We built a very solid infrastructure. We build new models. So we keep innovating. And I think just this year we had 3 major big releases. And next week is going to be another big one. And basically, so the challenge is really just keep innovating and building new things, and also listen to our customers, right? So we listen to our customers every day, and we try to channel what their needs are into a product. And I think the main growth was the simplification, and I can show you why that is. And if you want to even share the screen again. So in order to simplify things, when you start from option, you can have Excel models, you can have financial models, and if we go on my desktop, yeah, you can have financial models, right? But nobody will really understand until you start putting very simple indication on a chart that people really understand. So this is a good example from today. So we had a massive sell-off in the Nasdaq at the beginning of the session, and then we had a break right there. So imagine if you are just using kind of technical analysis or any strategy that you might look for, where is the end? Where is the bottom, right? Where can the market stop? And basically then comes the power of the option data and the power of being able to translate those complex charts that we saw, or those signals, into some lines on your chart that have a meaning. So they carry a lot of value. So the power of option data now is translated into a chart, and suddenly you have a path, you have a clear vision of where the market could go, and where, once it stops, where is the next target, where is the next area of interest, and then you can start planning your day. But at least it can help you give a clear understanding of where the market can reverse, where the market can accelerate, and what are the areas that you might want to target.
So there's a good saying when it comes to developing an app, which is you are not your user.
Yeah.
Right. And as an entrepreneur, you try to create a service, create a product to solve usually a problem that you're having. But then as you start to do that, you start realizing that it's not really about you. It's about the customers, to your point, listening to the customers.
Absolutely.
I'm curious, in terms of sort of the evolution of the service, the evolution of the offering.
Mm-hmm.
How many iterations did you go through? How many times did you rejigger or rethink the way you're presenting things because it was maybe resonating with you but not with others? I'm always fascinated by sort of that progression, that journey.
So I think, and I'll give you a very good example. So if we go back to maybe one of this, let me see if I have. Let me see if I can share a slide, right? So So I think the backbone of the technology was built at the beginning, and obviously some of the models are have not really changed because it was very innovative what we were trying to achieve. So the first thing is obviously gamma levels, reaction zones. Uh, the most important part is understanding how the market makers work, how the option market work, and then understand where the price could change, because everybody really needs to understand, okay, what is my risk and what is my potential profit. So those are the two things obviously you have to bear in mind. If I'm in the market, how much can I lose and how much can I make, and what is my risk reward? So am I taking too much risk, and so on. So we try to build kind of like indicators and levels, and we call it gamma levels and key levels, that can help you understand where the market can go and what could be your potential trading plan. And the goal was, with our data, you need to be able to do it in 5 minutes or less. So if you're like trading NVIDIA, you need to be able to go into the charts and understand, okay, what is my roadmap for the day in less than 5 minutes. So we basically built kind of the idea behind it with that mindset. Somebody has to come in, they need to be able to understand the charts and being able to make sense of it. And then obviously we build the education piece, obviously, to support that. And then this kind of like evolved. So let me give you an example. What we see here is the same level that I showed you before, where the NQ kind of reversed. We did the same for stocks. And at the beginning, this was tailored more for like day traders. So obviously the 1 day move is really for day traders for the next day. And we had a lot of customers that are like, man, I cannot be on my laptop every day. I need to have something that I can use if I'm basically just placing one trade a week or one trade a month. So that's when we developed the same model for swing trading. So the evolution of kind of like our technology became like, okay, some customers that were really active, they were like, I love your stuff, but I cannot use it because I cannot be in front of a screen every day. So, okay, no problem. Let me go back to our team and let's see if we can come up with a model that can help you for the longer term. And then obviously we had a lot of zero DTE traders, right? And they were selling option every day. So this model really worked really well for them. But then we had others that were like, okay, I'm losing too much money because I taking too much risk for the premium that I'm getting. But it would be great if you could do the same thing with a longer time horizon, so I can risk less and potentially generate better risk rewards. So that's why we started building models that can actually solve that problem. Another problem that we had is that a lot of our customers were trading futures. So obviously, we didn't have options on futures at the beginning of the year. So we looked at the data, and then we created a product that can now be tailored for futures traders. So a lot of our traders do not actually even look at options, but they use our level for trading futures because the option carries a lot of value. So I think, yeah, we have always evolving, always listening to the customers. Integration became a very important part. So everybody was like, I love your data, but how can I bring it into my trading platform? So then that's when we developed like the first trading view indicator. Now we are on 5 or 6 different platforms because another thing, you want to make the decision and you want to be active. So the way you're active is obviously with your trading platform. So that was very, very key driver as well of our growth.
Yeah, actually, I'm impressed you have as many integrations as you do with TradingView, which I happen to use myself. I am curious, how do those even come about? I mean, that's not easy to kind of get in front of these companies and pitch them on something like this.
So I think with the integration is the first one that we really did was NinjaTrader, and I think we had a lot of customers that were requesting it. So a lot of our user was obviously using TradingView as their main kind of decision-making platform for charting, but then all their execution was done outside because if you're a futures trader, you are most likely using a different tool. So then we started looking at what were the bigger ones and the ones that we could deliver in a very short amount of time. So NinjaTrader was the first one. We were able to get in touch with the team, and we're now part of the vendor licensing team for that with them. And I think the key fact was that they didn't really have a lot of companies that were actually working on options. So they were really impressed by, okay, very interesting, because maybe in the futures they will have options data, I'm not sure. But basically, we are the first really company that has kind of like an indicator that is looking at futures options, not only just pricing data. So it's kind of like a different approach. So we were able to get there, and then the others is really we developed ourselves. We obviously have a team of developers that has been working on those, and the goal is really to be able to cover almost every integration that we can, basically with the limitation of the technology that we can build, to help everyone facilitate the way they execute and not having to have too many platforms open at the same time. Because again, time is money, money is time. So the more time you spend going from one platform to the other one, maybe you're losing opportunities, or maybe you are too late to be able to capitalize on the ideas that you get.
Are you an active trader yourself? I mean, I assume you're using this obviously for yourself. Just talk about sort of your own integration.
Yeah, absolutely. So obviously, we trade ourselves as well, and we really developed these models obviously for our own use. So it's basically like we had our ideas together. We had our at the time CTO putting this into a code that we could use systematically, and that's when we started doing it ourselves. Now we use it as well, not as frequent as before because of the time. Obviously, running a business takes away a lot of time, so we are less active as before, but we still use it for our weekly trades and also like our longer term positioning. So we always monitor what's happening in the option market for our longer term portfolio as well.
Going back to the alternative data point, there's alternative data, and then there's alternative data that matters. Again, the options gamma and that type of visual matters, but I have to assume that when you're trying to create a platform like this, it's very tempting to put alternative data that really doesn't have any predictive power. So how do you go through sort of a process of identifying what you want to release in the future that's new, that really does add value? Because it's not that simple.
Yeah, no, and again, I was lucky enough to have worked really closely with big funds and kind of understand the approach from alternative data, because whenever they look at alternative data, the challenge is always to be able to find an excess of return. So whatever it's called alpha on top of what they're already doing. And also correlation is also very important. So if you have, for example, a data set that can give you a 2% return, additional return, and then another data set that can give you a 2.5% return, but they are very highly correlated, that's not interesting. That's not a data set that can actually add value. So when I was at the startup, it was always like, not only about alpha, but it was also about correlation. So whenever you can find something that is completely uncorrelated to what everybody else is using, that is when you start adding value, because that's something that is very unique to what you're doing. So whenever we are building models, we are always try to understand things that we can do different by obviously leveraging the data set that we have access to. So in the future, for example, we are planning on building more like macro models or like earnings prediction models, things like that can really add value to something that is not there at the moment.
Longer term is the is the hope that you get to be so large that a larger data company acquires you? Are you looking to do funding rounds and be entirely on your own? Sort of talk to me about the business direction.
Yeah, sure. So obviously we started very small. Obviously we started, but now we build a team. So we hired many different resources for 2025. So we're going to start developing our web app, which is going to be a very unique research platform. The first version will come out next week. So we're going to have an initial iteration of what we're going to develop in the future. The goal will always be complex information, simplification, and actionable insights. So that's kind of like the way we want to structure our vision. And then for the future, at the moment, we're not looking to raise funds. We don't have the need right now, but in the future, potentially, maybe as we grow, we're really like building the team. We're really building the infrastructure. We are going to start implementing AI, and the goal is really to develop an app that can help you in less than 5 minutes a day understand what the market is doing and how you can actually be active. In terms of exit plan, we don't have that yet, but once we get to that point, I think there could be different options for sure.
Fabio, for those who want to get access to the service, maybe just kind of learn more about all this, talk about where people can get that access, and talk about maybe just the Discord, because I think that's where a lot of the, especially younger traders, like to go to.
Yeah, absolutely. So I think if you go to mentorq.com/free, you can actually create a free account right here. So just obviously create an account, and then you'd be able to get access to our Discord, our free Discord. Within Discord, we have obviously a lot of different rooms. We have our trading rooms right here where you have like professional traders talking about futures trading, options trading, macro, iron condor, like all of that. And then you can also access all our data directly through here. As of next week, you'll be able to actually access the data directly through the website. So all of these models will actually be moved to the website. So it still be available on Discord, but you're also going to have an app that can help you, especially if you are like not used to Discord. For younger traders, Discord is obviously the tool that they use, but for more like seasonal traders, then obviously you don't really want to learn a new platform. So we're going to have the data all in our website. So the first step is really come here, create an account, sign up for free right here, and then obviously once you have an account, you'll be able to access your account dashboard, where you're going to be able to get access to the academy, our community, so Discord, our guides. We also have screeners, and all of these data will be available right here. So yeah.
Hopefully everybody found this to be an interesting conversation. Please show some support to Fabio Ruggeri. Check out Menthor Q. Sign up for the free because it's free. Why not learn about it? Yeah. It is true that the option side is very powerful to look at from a liquidity, flow, potential profit, and loss perspective. Any parting words here, Fabio? I think I give you a lot of credit. It's not easy to do what you're doing, and I think you're doing something that's different.
Yeah, no, I think next week, also I didn't mention, we are actually going to release intraday gamma levels, which is going to be very important, especially for days like today where intraday volatility was really key. So being able to support you also with like shift in the market throughout the day, that's a massive release for us. And I think, I really would like to thank you first for your time and for our community that's been really, really great to us. And I hope we can provide value to everybody every day going forward, and keep adding value, of course.
Appreciate those who watched this live. Again, this was a sponsored conversation. Personally, I thought it was very interesting. Hopefully, I'll see you all in the next episode of Lead Lag Live. Thank you, Fabio. Appreciate it.
Thank you.